listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries, as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message. I will be delivering it every day. We have a very focused show. We only discuss items that affect the roof over your head, your bank account, and anything I feel would benefit you. And then remind you, if you ever have any home or finance related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. Celebrating today, National Static Electricity Day. Ooh. A little loud there, guys. A little loud on our buzzer. Let's see if we can try that again. Yeah, it's a bit hefty on the volume of the buzzer today. But, something we'll see if we can get that corrected for you. Hey, today is also National Apricot Day. I enjoy the apricots, but the most important day that we are celebrating right here, right now, today, it is National Law Enforcement Appreciation Day. Thank you to all of the men and women who are in law enforcement. We appreciate you. We appreciate you every day, but today is set aside as extra special. So we say thank you to you. We appreciate you. We appreciate you every day. A little background there. Good morning, Alex. Glad to see you with us. Big days coming up for Alex and his group this weekend. Looking forward to that, buddy. Dow Jones Industrial Average up 138 points, almost 139 points. Oil, I don't know what this is going to do. We're going to have to watch it for you. Oil's up $2.50 per barrel. Now, we did see that there was a big drawdown. That means that we used more oil than we produced last month by about almost 2 million barrels. But if we look at the gas prices, $2.23 is the national average in Taxifornia. $1.07 higher than that, a little over $1.07 more in Taxifornia. Missouri, 184.6. Let's see if I do some quick math. 184.6, and we got 330. That's enough to say, ow! Yeah, that's painful, but that is where we are. We have a state that likes to tax us as much as possible.
Nothing like a little air superiority.
Yeah, we'll see what happens, though, because there is some breaking news on that front. Guys got our news icon going there, our news sound going there. President talking about Taxifornia, our state of confusion, but we're going to get to that in just a bit. Also looking today, we've got the 10-year Treasury up a little bit more. 2.73 is where that 10-year Treasury is. Fascinating watching what's going on there. We'll see what the Federal Reserve has to say. One of the Fed presidents came out this morning and said that they were looking at 3 rate hikes in 2019. We had been hoping for a little bit better than that, maybe 2 or none. But we'll see what the Fed minutes have to say. Those are going to come out again later today. We also have auctions today, so we're going to see a lot of news going on today. But here in California, you might be watching this one. It is fascinating to see President Trump has threatened to cut off FEMA funding for the California wildfires. Again, going back to the same thought, if you don't want to help yourself, why should everybody else help you? That has the same thoughts as the salt deductions that we've seen going on. So those salt deductions are going away. That's, in my opinion, I'm not a fan of the state and local tax deductions. Why should the other states be paying more because our state is fiscally irresponsible? Again, just my opinion, but hey, it's my show, so I give my opinion all the time. But hey, some California, we're looking at it saying, hey, something we want to just continue spending money that we don't have. We're going to continue the taxing. We're looking at other ways of spending more and more money. Gavin Newsom came out with that. He told everybody he wasn't going to tell us what he wanted to do ahead of time. Does that make any sense to anybody? Hey, elect me, and I'll tell you later what my plans are. Because it might scare you if I told you now. Well, the president, I guess, is not scared. He's not intimidated. He's saying that billions of dollars are sent to California for forest fires. That, with proper forest management, would never happen unless they get their act together, which is unlikely. I have ordered FEMA to send no more money. It is a disgraceful situation in lives and money, and I certainly have compassion for everyone who has been affected by the forest fires. Too bad our state government will not act. I have shared with you before. I have spoken with fire chiefs off the record. Why do they do it off the record? Because they want to keep their jobs. But they tell you right off that there are things that can be done to prevent some of these fires. We just don't want to do them. We don't have the desire in the state of confusion to do what it takes to protect ourselves. We want to call it an environmental issue. Right? And we continue to go off on these same issues that they're environmental. Well, let me ask you this simple question. We had Brian Lockery on earlier this week, and we were chatting about the quote-unquote environmental issues. Well, they've been holding up a water desalination plant in Orange County for decades. I think it's close to 20 years now. We've seen how these desalination plants work in other countries. Hello, Israel's in various parts of Africa. But we don't want to do it here because of environmental concerns. Well, now we've seen even in our own backyard, Carlsbad has a water desalination plant. Gives San Diego County 10% of their water. Yet in Orange County, we think that we're going to be different and it's going to have a negative environmental impact, so we won't do it. Does that make sense to anybody? Can anybody give me a good idea? Hello, is anybody here on? Can you hear me? Can you hear me now? Just checking. Want to make sure we're awake. But didn't know if the mic was on this morning. We had to check that one out. But something, they've got the plant there. They've got the understanding of how to do it. We just don't want to do it. So maybe if we did controlled burns, and I did see coming back from Tahoe over the holidays that there was an area along the side of the road that said, please don't worry, this is a controlled burn, a controlled fire. Amazing. Moving right along in the news, how about this one? We talk about divorce a lot, and I think it's early next week. Barbara McNamara will be joining us, a divorce attorney here in Orange County, talking about divorce. But think about this one. I don't know if they saw this coming, or if there is any kind of a prenuptial agreement, but Amazon CEO Jeff Bezos announced that he and his wife Mackenzie are getting divorced. Sorry to hear that one, but it is what it is. I know I have that sound here somewhere, but here's the issue when you think about it.
It is what it is.
A little slow. Bezos, now America's wealthiest individual, $130-some billion net worth. Now, if there's no prenup, you've married 25 years, 4 kids, might be one heck of a separation. might not even be the world's richest man any longer. Talk about the richest divorce, but that will be what's coming there for them. Amazing. That's going to be a fascinating lawsuit to follow, although they say they are friends and they have still common interests, so it'll be interesting to see how common it gets when they start dividing $130 billion. There should be enough to go around. The news of the day, did you watch the speeches yesterday? The president had his speech about the border security, followed by the Tweedledee and Tweedledum came on there, Nancy and Chuck. Fascinating. You probably know exactly what my opinion is, but when you really think about watching the speeches, and it doesn't matter what side of the aisle you're on, we heard the same old from Nancy Pelosi and Chuck Schumer, although Chuck didn't cry this time, so we were a little better off there. But he talked about the idea about everything with Nancy and Chuck was all about pain. Did you get that thought process in there? That the president is throwing a temper tantrum because he wants to protect the American people. The president is the one that stayed to try and solve the problem over the holidays while Pelosi was out vacationing in Hawaii. Now, I know she told us that Hawaii is part of the U.S. I guess she assumed that many people went to school in her district up in Northern California and did not know that Hawaii was part of California. Now, the rest of the country, we know that. Maybe in her district, that's something that's news that she had to describe. The president stayed in Washington, D.C. That's where the capital is. Maybe Ms. Pelosi didn't know that. But if you looked at if you contrast the two different speeches, everything regarding Pelosi and Schumer was same old, and negative. President talks about the love of family, the love of the lost individuals who will never see their families again, and his remorse over the fact that there are 800,000 people that work for the federal government that are not going to have paychecks because the Democrats don't want to get involved at all. Now, I did hear an interesting report this morning talking about the fact that they had the framework of a deal in December until crying Chuck Schumer, yes, the author of Schumer Shutdown 2.0, said, you know something, maybe we should just wait until Ms. Pelosi is in charge of the House of Representatives before we do anything at all. Sounds like a great way to lead. Let's close the government and wait. Unbelievable. Talk more about this and more. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. We've got a lot on the docket to chat about today. We're going to talk a little bit about that vacation home. Should I get an FHA or a conventional loan? Is the recent dip in interest rates here to stay? We'll talk about that. We were going to talk about the amortization schedule yesterday, but we spent all of our time discussing homelessness. Thought it was a great topic, so we'll bring that into today's conversation. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO-certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Well, welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message. And as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by the area trusted, or actually Mortgage Minute. It's brought to you by our friends at Gold Star Mortgage. When you're ready for that next mortgage, Gold Star has the programs and the products for you. Make sure you're getting the information from Gold Star on a regular basis. If you're not signed up for the weekly mortgage rate update, just send me an email or text message and we'll get you on that mortgage rate update list every single week. We publish that on Friday afternoons. Sometimes it's Saturday mornings that we give you the mortgage rate update. But today, the Mortgage Minute, the Dow Jones Industrial Average up 140 points. Oil up 241 a barrel. We're looking at the 10-year Treasury down ever so slightly right now, not even enough to chat about. We're looking at the Fannie Mae bonds. They've been pretty flat this morning, but I'll tell you right now, I am in a locking mode on the Fannie Mae bonds. Why am I locking? That's not the things that they're giving you on Google. They tell you the information on all of those different numbers, but they're not going to tell you why would we be locking right now. And the main reason is we've got the Federal Reserve coming out with their minutes. And historically, when the Federal Reserve comes out with their minutes, it is not a pleasant time for mortgage-backed securities, so we like to get our loans locked before that happens. The Mortgage Bankers Association reported that mortgage application volume increased a whopping 23.5% from the week. Why is that happening? We'll chat about that as well, about those mortgage bankers. What are they doing? What are they up to? What do they have to say? And we'll chat about that one with you. We're also going to be looking at the debt consolidations. That's been a big issue right now. While interest rates are low, we like to look and say, can we consolidate debt? What is your household blended interest rate? So that's part of that. Applications to purchase a home were up 17% after falling 15% the last 3 weeks. Purchases are now up 4% from this time last year. Refinances rose by by 35% after a 14% drop the past 3 weeks. Still have to watch how this report smooths out, and as we could be seeing some exaggeration to the upside because the Mortgage Bankers Association does not do their adjustments too well. The refinance share of mortgage activity increased from 43.5% to 45.8% of total applications. The adjustable rate mortgage share of activity increased to 8.4% from 7.9% of the total. The average 30-year mortgage decreased from 4.84 to 4.74%. Again, those are the Mortgage Bankers Association numbers. Freddie Mac's numbers will come out tomorrow. There are a few items released later today that can impact the markets. The first one is at 1 o'clock Eastern Time is a 10-year Treasury note auction. The level of participation or demand for Treasuries will be important. And at 2 p.m. Eastern Time, we're going to get those Fed minutes from the December 19th meeting when the Fed last raised rates. Historically, again, as I mentioned, days that the minutes have been released have been negative for the bond market. And we'll continue watching that for you. Mortgage bonds have broken under their support. That's significant. When they break below support, that means the bonds are going down. Interest rates are going up. But as of right now, we're not seeing a whole lot of change. Probably on a wait-and-see basis right now for the market. So we're going to continue watching that one for you. The Fannie Mae bond is up 2 basis points right now. Not enough to even mention, so it's not a real big deal. The 10-year Treasury, that's up 2 basis points as well. Again, that's 0.02%, so it's not a major issue. But the question that comes up, again, that's a Mortgage Minute brought to you by our friends over at Gold Star Mortgage. The real question, though, is we've seen interest rates going down a bit. Are they there for good? That's the question. Interest rates for a 30-year fixed-rate mortgage climbed consistently through 2018 until the middle of November. After that point, rates returned to levels that we saw in August to close out the year at 4.55%, again, according to the Freddie Mac Primary Mortgage Market Survey. Remember, that is based on the perfect loan, and I don't know, or the perfect borrower. I don't know anybody that's perfect. That would be your conforming loan with a 40% down payment, 750 FICO score or better, purchase loan, not refi. And again, that's going to be on a primary residence, no condos, single family. So that's why I say it's the perfect loan. There are about 30 different loan level price adjustments, and that's when they use this one. They just come out with whatever the best numbers are, and that's what they used. After the first week of 2019, rates have continued their downward trend. As Freddie Mac's chief economist Sam Cotter notes, this is great news for home buyers. He states, and I quote, mortgage rates declined to start the new year, with the 30-year fixed-rate mortgage dipping to 4.51%. Low mortgage rates combined with decelerating home price growth should get prospective home buyers excited to buy, unquote. In some areas of the country, the combination of rising interest rates and rising home prices had made some first-time buyers push pause on their home searches. But with more inventory coming to market, continued price growth, and interest rates growing, this is a great time to get back in the market. And that is a great time to get on the Get Mortgage Ready program that we have available for you from Ron Siegel Radio. Get Mortgage Ready. The Get Mortgage Ready deals with the basic 4 items that we hear most frequently people are concerned with. They're concerned that their credit is not sufficient to get a new loan. They don't have enough down payment to get a new loan. They don't know if they're going to qualify for a new loan to buy that home. Can they afford it? So what does the Get Mortgage Ready program do? It looks at all of those things for you. It gives you a whole host of different tools for improving your credit score, so you understand how your credit score is derived and how there might be some tips or tricks you can use to improve or enhance your credit score. Things they don't want you to know about, but hey, you're a listener of Ron Siegel Radio, so I will share it. We've also working with a major company, should have that announcement ready in the next few days, where you can put all of your finances in one safe, secure place and monitor them. You can see what's happening on all your bank accounts, all of your credit cards. No, you don't have access to make changes to your credit cards. That does not happen there. But the idea is that you're going to be able to get information to try and help you with building a budget. It'll help with the budgeting process. And when you get help with that budgeting process, the idea is that you'll be able to then see, okay, am I ready for that new home purchase, or do I need to wait a little bit longer? And how do I get on a budget for that? All of these are free tools from Ron Siegel Radio, the Get Mortgage Ready program. That is the idea. Now, will this trend continue? According to the latest forecast from Fannie Mae, the Mortgage Bankers Association, and the National Association of Realtors, mortgage rates will increase over the course of 2019, but not at the same pace they did in 2018. You can see the forecast quarter by quarter on a chart I shared on our social media channels earlier today. When you look at all three of them, they're looking at, by the end of this year, 4.93 is where they're looking at the mortgage rates to be. Bottom line, even a small increase or decrease in interest rates can impact your monthly housing cost. If buying a home in 2019 is on your short list of goals to achieve, let's get together to find out if you're able to do it today. Let's get you on the Get Mortgage Ready program. You're going to get some information on a regular basis from our team, and you can be ready to buy. Some people are going to find out that they could actually buy today, that they are qualified, that they have enough money, that they've been misled or been listening to various myths, and they'll be ready for us to send them off to a real estate professional that's in our network that understands the Get Mortgage Ready program and understands what our process is, what our thoughts are, and they can take advantage of that fast pass loan approval that we have from Gold Star Mortgage available to you in order to get you into that new program. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, should I get an FHA or a conventional loan buying a vacation property? Is now a good time to do that? What is an amortization schedule? That helps out if you're looking at the debt consolidation loans that we were talking about earlier. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details, 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender, licensed under NMLS number 217037.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel Lending Team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel Lending Team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Homeowners that are 62 and older are about to find out a great way to live a better retirement. It's called a reverse mortgage, and SLT can help you learn more. Call the Siegel Lending Team at 800-306-1990 right now to receive your free booklet with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. When you call the experts at Siegel Lending Team today, you'll learn the benefits of a government-insured reverse mortgage, how it will eliminate your monthly mortgage payments, and give you tax-free cash from the equity in your home. Here's the best part. You still own your home. Now is the best time to take control of your retirement. Call 800-306-1990. That's 800-306-1990 to get your free brochure. Call today or visit our website at SiegelLendingTeam.com. That's SIEGEL LendingTeam.com, or simply call 800-306-1990.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio anytime at 800-306-1990, 800-306-1990. Good morning, Andy. Glad to see you with us. Good morning, Linda. Lisa, glad to see you with us as well. I see that Letitia's on. Carol, good morning. Tony, good morning. Coach Bruce, welcome back to California. I hope you had a good trip to America. I harass Coach Bruce all the time, but that's a little fun stuff for us right there. Glad to have all of you joining us, the Real-Time Real Estate segment today, being brought to you by the area-trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. Buying a vacation home. Are you thinking about buying a vacation home? Have you already gone out looking for that vacation home? Is now a good time? That's the question. Every year around this time, many homeowners begin the process of preparing their homes in case of extreme winter weather. That is lots of rain here in Southern California. Not really. Although we do have some listeners that are in. I heard that they closed Highway 395 for quite a while yesterday because of severe weather. So our broadcast area does get us into some of those areas. And I know Orange County, you're not one of them. Some others skip winter altogether by escaping to their vacations homes in the warmer climates. We used to talk about going out to Palm Springs for that. How about that, Linda? I was out there last weekend. Brr, it was cold. For those homeowners staying at their first residence, AccuWeather warns, quote, the late week cold shot should fade next week, but this is a warning shot for winter's return late in the month and early February, unquote. Given this, it's time to go and stock up on winter weather supplies. However, if you're tired of shoveling snow and dealing with the cold, maybe it's time to consider obtaining a vacation home. Might be changing the locations of some of the vacation homes, too. I mean, again, I was out, like I say, out in the Palm Desert area over the weekend, and I think it might have been warmer here staying at home. Time to take advantage of the equity in your home, as the latest equity report from Adam Data Solutions stated. Quote, nearly 14.5 million U.S. properties are equity rich, where the combined estimated amount of loans secured by the property was 50% or less of the property's estimated market value, up by more than 433,000 from a year ago to a new high as far back as data is available in the fourth quarter of 2013. The 14.5 million equity-rich properties in the third quarter of 2018 represented 25.7% of all properties with a mortgage, unquote. This means that over a quarter of Americans who have a mortgage would be able to use some of their home equity to make a significant down payment toward a vacation home. And many are doing just that, according to the same report by the National Association of Realtors. Quote, 33% of vacation buyers purchased in a beach area, 21% purchased on a lakefront, not Lake Michigan, and 15% purchased a vacation home in the country, unquote. Many homeowners who are close to retirement will use some of their equity to purchase vacation homes. Some use it for debt consolidation, which may eventually become their permanent homes post-retirement. Bottom line, if you're a homeowner looking to take advantage of your home equity by investing in a vacation home, let's chat about options. Remember our conversation yesterday. That is just a thought, and it's something that was staggered me, so I thought I'd share it again with you. Part of it has to do with our Get Mortgage Ready program that has the financing tool as part of it. You can actually see where your budget is, where all your finances are. Even if you're not looking to get a mortgage, the tool is a great tool for you because everybody can use the tips on credit improvement. Like I said, I've been looking at credit reports for decades and never ever seen a completely accurate report. If you're not looking at getting a new loan, you may not need to look at the report, but you can get the information anyway. The other part of it is yesterday we heard when we were talking about homelessness, the largest segment or the largest growth of homeless is our seniors. Unbelievable. So that's a shame that we have our seniors are the largest segment of the population going and becoming homeless because we haven't prepared properly. That's the Real-Time Real Estate segment, again brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T to 79564. Find that dream home before someone else does. Question I get all the time, should I get an FHA or a conventional loan? Well, a lot of people have these misnomers, so I'm going to try to share, to dispel some of the myths for you. Federal Housing Administration, that's the FHA loan, is insured by the federal government. It is not a loan that is given out by the Federal Housing Administration. No. FHA is simply a loan that is insured by the federal government. First-time home buyers and those with lower credit scores and lower down payments are more likely to qualify for an FHA loan. A conventional loan isn't insured by the government. It's instead backed by private mortgage insurance or private mortgage lender, and the borrower usually pays that insurance. Conventional loans can be harder to qualify for and require that the borrower have a higher credit score. FHA and conventional mortgage loans are the most common financing options for today's mortgage borrowers. In 2018, 74% of all mortgage loans were conventional loans. But should you get an FHA or a conventional loan, and which program makes the most sense for you? The key to deciding which loan you should get is understanding the characteristics of both programs and how they relate to your financial situation. You may be a good candidate for either program. If so, you want to select the loan that aligns with your payment and cash flow needs. On the FHA loan, they have programs that will go down as low as a 500 credit score. The conventional mortgage loan, they're going to want a 620 score or better. Did you hear me say 620? That's one of the big myths that we see in the Get Mortgage Ready program. People think they have to be 780 or 800. That's not true. The credit history or impact on qualifications, shorter wait times after negative credit events on the FHA loan. Shorter wait times, these credit events are like the short sale, foreclosure, bankruptcy, divorce. Sometimes that'll have an impact. FHA is better there. The longer wait time after a negative credit events, though, some lenders may be flexible depending upon the circumstances of that negative event. The typical down payment with the FHA loan, 3.5%. The conventional can go as low as 3% with advantages for a larger down payment. No advantage for the larger down payment above 5% on the FHA loan. Mortgage insurance. On the FHA, you need both an upfront mortgage insurance premium, that's 1.75%, and the 0.045, figure this, it's 0.8% to 0.85% on the FHA loan. On the conventional loan, the mortgage insurance there is either a one-time payment or monthly fees. Could be from 0.55 all the way up to 2.25 depending on credit. Could be waived with a 20% down payment, and it could be a split mortgage insurance to help save you some money there as well. Typical interest rates, lower interest rates on the FHA loan generally, And obviously that means the conventional loan is generally going to be a higher interest rate. But again, don't worry just about interest rates. Look at your Benjamin Franklin rate, the total cost for the loan. Again, the interest rate sometimes will just be one number. You want to look at all things considered. The debt-to-income ratio. FHA allows for a higher debt-to-income ratio than the conventional loan. Obviously, the conventional loan is a little bit lower. Typical of approval time, they're both real quick. Don't let anybody tell you that one is more difficult than the other. FHA loans are insured by the Federal Housing Administration. Borrowers pay mortgage insurance premium in addition to monthly payments. An FHA loan requires 2 mortgage insurance payments. Again, as I mentioned, you're going to be looking at the upfront mortgage insurance and you're looking at an annual premium both. You're not going to see the double cost unless you just choose it on that conventional loan. The bottom line here is get in the game. That's the most important thing for you to understand on this whole issue is don't be renting any longer than you really have to. I don't think that there's we have the Get Mortgage Ready program, but the focus really in the long run is going to be getting you into a program, getting you into a house. So instead of paying somebody else's mortgage, you actually start paying your own mortgage. You're always going to pay a mortgage. Like I said, about 70% of all homes have a mortgage. So the question becomes, are you paying your mortgage or your landlord's mortgage? And I'm going to suggest to you, hey, why not pay your own? That's just my thought. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, we're going to chat a little bit about an amortization schedule and 5 ways you can prepare for a financially healthy new year. All that and more. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us. Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area-trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Most businesses struggle to get the online reviews they need to get a competitive edge over their competition. Rex is a brand new technology that uses text messages to direct happy clients to your online review sites, Zillow, Google, Facebook, and Yelp, and unhappy clients to a private survey, so businesses can win more customers. Try Rex today by going to www.meetrex.com.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRENMLS 217037 and 145502 and Cal BRE 0186945 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Word on Wealth segment today being brought to you by AskAboutReverseMortgages.com. Are you 62 years of age or older? Do you have some equity in your property? Are you looking to save on some cash flow? All of those are tools of that reverse mortgage. I am a big proponent of the reverse mortgage. Did one for my mom and dad. It worked out wonderfully. I'm just sharing it with you. Thought you might like that information as well. There's a lot of myths on that reverse mortgage, so I think you might want to take a look at it and just get some of that information for yourself. Find out if it makes sense for you. Find out if it makes sense for your family. I am not one that believes there is any real bad loan products. I think there's bad applications of loan products. And I think that you just need to explore to see what's right for you, what's right for your family. The Word on Wealth, though, what is an amortization schedule? That is our first topic here on this area. So really, it's an accounting term, and I know whenever we talk accounting terms, that's pretty boring. At the highest level, it means to spread out expenses over time. In business, it means to spread out expenses for assets over time for tax and or accounting purposes. For banking, it means to pay off a debt, typically a mortgage or car loan, in regular installments by following a fixed payment schedule. An amortization schedule is a table that shows each payment or installment for the life of the loan. Amortization schedules also show both principal and interest for each payment. The principal is the amount of the loan that represents the actual money borrowed. Interest is the interest paid on the money borrowed. So we're going to have a couple of different issues in there. Notable characteristics of a typical amortization schedule is the gradual reduction of the percentage of each payment that goes towards interest and the gradual increase of the percentage that focuses on the principal repayment. Any online amortization calculator will show this. You can always get the amortization calculators. We're going to have that as part of the Get Mortgage Ready, but if you go to text Toolkit, TOOLKIT to 79564, you'll be able to get the Ultimate Home Finance Toolkit. We're going to be adding to that as we go, but you're going to see where the numbers switch. An amortization table shows you how your loan works. It also helps you see possible outstanding balances or interest costs that might arise in the future. What happens if you pay off the loan early? Well, the interest stops if you pay ahead on it. That's why when we send out our quarterly mortgage updates, we're basically showing you exactly what's happening from the amortization table on a loan, on a mortgage loan. What's happening is you're bringing down the balance so that more of your payment goes to principal. What happens if you pay an extra $100? We generally like to show, $100 a payment. What is that going to do for your repayment schedule? How much sooner can you pay off your loan by paying that extra $100 a month? We're going to share a lot of information. This is part of Get Mortgage Ready, but the breakdown on some of the terminologies found in the amortization table. So the schedule payments or monthly payments. That column is going to be details of every payment you make and or are expected to make each month. Within that payment, a percentage goes toward paying your interest. The rest is used to pay the balance or principal of your loan. Interest, that's pretty obvious. Like all loans, interest is charged on the principal you borrow each month. The interest column shows how much of your payment is applied toward the interest of the loan balance. In other words, how much interest you're paying. Principal, that row or column is going to show you how much of the payment is applied toward the principal balance, the cumulative interest, cumulative principal. Just adding those columns together. If the schedule provided to you by your bank doesn't include these tables, it's easy to get it. Just give me a call at 800-306-1990. Again, extra payments going to go right toward the principal. Make sure you direct it there. That way it lowers that balance, lowers the amount of interest you're paying on a regular basis. Another thing most amortization schedules don't show are the additional fees you may need to pay. Fees can include origination fees on the mortgage as well as closing costs. Again, remember our friends at Gold Star Mortgage, no loan origination fee at all. So that's why we look at this in relation to the debt consolidation loan. The debt consolidation loan is basically the loan that's going to tell you, does it make sense? What is your household blended interest rate? Once you know your household blended interest rate, then you're able to tell what makes sense for you in a refinance or restructuring of that home loan. You might be saying, okay, I've got a 3.5% interest rate on my mortgage, but when we look at the blended household interest rate, blended meaning you're looking at a weighted average, you find out that, I'm not really paying 3.5%. I'm paying close to 6%, 7% because of all of my other debts. Yet I've got that debt equity sitting there, equity that's not making you any money. You pull that equity out, pay off those other debts, and then continue to make a larger principal payment so that we get the amortization schedule working for you. Just strategies. I know this sometimes will sound overwhelming, but my focus here is not to overwhelm you. The whole focus here is to say, something, there are tools out there to help you that make sense for you. Just a thought for you. That's the Word on Wealth segment, again, brought to you by AskAboutReverseMortgages.com. Every year we see people making New Year's resolutions. We are right now on the 9th of the month, so you probably haven't abandoned all of them yet. Maybe you've abandoned some of them. But let's look at some that you might want to be looking at for 2019. If you look back over the past year, you probably agree that you swiped that credit card maybe a few too many times. You whipped out that wad of cash a bit too frequently. For 2019, that wad tightens immensely. So here are some New Year's resolutions that might help your finances. Ron Siegel Radio, we're here for you. We know that for many Americans, tightening up their finances is a major goal for the new year. But let's do more than tighten our money belts. Let's stretch them. Here are some New Year's resolutions for the money-minded that will make an immediate difference. Number 1, start a reserve fund. You just open up a separate account for that reserve fund. Then you're going to show it in the home finance tool that we're going to be giving away free as part of the Get Mortgage Ready program. Even if you have a mortgage, doesn't hurt you. If you haven't already, you need to start an emergency fund. We live in uncertain times where basically anything can happen. Start putting away something, even a little bit each and every pay period. And I'll give you a savings plan. If you go on that program, we'll set that up for you. Number 2, use your tax return as a savings fund. You might even put it in that emergency fund, but put it away. In line to get a bunch of money come tax time. And we told you yesterday the federal government is going to be sending out returns on time. Don't look at that money as a windfall to be used all in one place for the new year. Why not earmark part of it for a savings fund? Make a goal based on an amount you can spare and stick to it. Number 3, go to the doctor or dentist. One way many of us try to save on money is by foregoing our routine visits to the physician or dentist, but that could cost us more in the long run. You may think you're saving money, but not following up on that checkup your doctor ordered. It may cost you way more money or more, right? It could cost you more in your health. If you don't get that treatment ordered for you this year, make it a goal to get your teeth cleaned regularly. Try not to skip any of those doctor visits. Number 4, Buy in bulk. Want to save serious coin for 2019? Make it your business to buy in bulk. Not only will you save gas from having to run to the store much less frequently, but you'll get a significant discount by buying a large quantity of the items you need. Make this year the year you bulk up. Maybe you want to share some of those bulk purchases with a family, a friend, a child. Number 5. If you're addicted to retail and have a habit of getting new credit cards to splurge, maybe freezing your credit is a good idea. Not only will it protect you from identity theft, but it'll offer a roadblock to any new lines of credit you try to open on a whim. Here at Ron Siegel Radio, we tell you exactly how to freeze your credit. Give me a call. I can give you the solutions to that as well. Just a little bit of tools for you to kind of help out for the new year. Always looking out for you from Ron Siegel Radio. And we ask you to do only one thing in return. Set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to John, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We will talk to you next time on Ron Siegel Radio.